Big trouble in the economy just getting started. Hey, everybody. It's Wednesday, May 18th, 2022. Welcome back to the channel here. We got a lot of economic financial news to get caught up on today and how we need to handle our money. And let's get started right here. Well, actually, quick announcement though. YouTube Shorts that I linked to in my previous video, it was a dead link because I had it set as private, and I'm sorry about that. I've got the link down below this video for those that want to check out the YouTube Shorts. What those are, they're little attempts to have a little bit of fun. My last one was about a home equity line of credit, and I'm not bashing or making fun of anybody that does that. I've actually taken out a home equity line of credit. Um, Sometimes home equity line of credits can be good. For example, you have a roof that's leaking, you don't have the money to fix it. That's one way you can try to tap some equity, fix the roof. Otherwise, just let your home get water damage. Not a good idea. So there are times and places for home equity lines of credit, but I do have a little fun over there with those shorts. So link down below if you'd like to see those. And again, the link does work now for those that want to check those out. Let's start right here. Earlier today, went on a little grocery shopping trip, and what did I see? Well, not very many eggs. Yeah, there's still some eggs left, but it looks like it's at about 90%, maybe 85% gone. Similar in the baby formula aisle, and not just baby formula, other baby products. I don't have a baby, but I thought I would check out that aisle because that's one of the big news items as far as shortages go, is baby formula. But it wasn't just that; it was actually a lot of the wipes were gone. I'd say about 60% empty. Maybe only 40% of that section was full, less than half. And it's really unfortunate because these are things that can be made here in the US. There's not ingredients that we don't have here that can't be homemade, made in this country. The problem is we've got a couple big, large monopoly factories, for example, the baby formula, and we've got these enormous factory farms that if one or two goes down, then there goes half of your supply. And it's a little different depending on what type of product you're talking about, or what type of food you're talking about, or what type of farm you're talking about. But when you have large um, consolidation, it's not a good thing. We need to have more spread out. That way, if a few farms go down, it's not going to dent a big portion of the production. All right, but this is the hole that we've dug ourselves into, and we were kind of herded in this direction where everybody can just sit on computers, talk on the phones, work in a call center, shuffle money around or actually shuffle digits on a screen instead of real money now. And those are called jobs, even though they really don't produce anything. So I think most of you know by now, the United States, we've become a country of consumers and importers, and now we're a very minuscule amount of being producers and exporters, sadly. So this is the price we pay, and things are going to continue to get worse. That's why I called this video "Big Trouble in the Economy is Just Getting Started." No solutions are being implemented. The stimulus checks that you saw sent out in the last couple years, those were not solutions. Those were temporary, not even fixes. I wouldn't even call them fixes. I would call them just temporary feel-good measures to make people think that the ones in control here are out to help you. And what that did, that gave people the illusion that the ones in control are out to help you. And now they're believing what they're being told, just like all the people that believed, okay, inflation was temporary, or they say these rising prices, it's because of the war. And it's just funny and kind of interesting to see all the people that still tune in to hear what the Fed says, considering how wrong they've been and how they've misled so many people with their forecasts. But we still have to watch the people that that steer the economy to try to figure out what's going on to see if they're going to keep on tightening or if they're going to go ahead and bring the markets back up. So far, it looks like they're at least talking about tightening. They're talking about raising rates. So continue to brace for more falling prices. Now, when people hear falling prices, they say, oh, great, there's going to be a crash. The housing market's going to crash. No, the housing market will not crash. You've got billion-dollar companies out there still scooping up homes. There's a recent article. Let me pull this one up here. And this one comes out of the Post. Goldman Sachs backed firm buys entire Florida community for $45 million, an entire community. And the scary part is they came in way over asking price. And if anyone thinks things like this are going to stop, I think you're kidding yourselves because these firms are too big to fail. If anything does happen where people stop paying rent, they're just going to get bailed out. So expect the wealth transfer to continue to flow up to the top in these mega corporations. These multi-billion dollar companies are going to continue to snap up homes, and the home ownership rate will continue to drop, and prices will not fall, will not collapse because of that. You may see some price declines in a few cities here or there. I think Boise, Idaho, we're going to go negative here probably within the next 12 months. But as far as a crash or collapse, not happening. And some people may say that's impossible. How can they keep on coming up with enough money to just keep on bailing out these mega banks and investment firms? Well, it's digital money. It's created in endless amounts on a digital screen. So it's to infinity. So there's no limit to this. The same way we can send out trillions of dollars. If you look back over the past few decades, trillions of dollars all over the world in foreign aid and spending. But at the end of the day, they're going to tell you that you're the ones that have to pay for it, even though they create the money and you can't create your own money. So yes, the continuation of this wealth transfer is only going to accelerate, and you could bet with the markets that have been dropping here over the past several weeks and months, that the big money got out before the average retail investor, and most of the wealth that was wiped out over the past few months were newbie investors, retail investors that got in at the wrong time. And we know that the big money, they're always tipped off. They always know exactly when to get out, and when they all get together at once, they can actually create the downturn in the markets. And it was very common over the past few months to see headlines like this: retail traders have now lost all the money they gained during the pandemic, according to Morgan Stanley. And we warned everybody back in late January, early February, when we saw what was happening with the markets and what the Fed was saying, that get ready for the downslide in the markets, not the housing market and not the cost of living. Those things are going to go up. Everything you have to pay for, energy, fuel, your rents, your mortgages, your food, your insurance, utility bills, etc. Everything is going up. Everything that you depend on daily, the cost of those are going up. The cost of living is going up. But the markets were coming down. We warned everybody about that several months ago before it happened. And how do we know? Well, because it's all easy money, it's all digital money created, it's all Fed driven. And it used to be just channels like mine saying that. Now it's mainstream. Mainstream. Check this out. Even mainstream sites like Axios right here are admitting that this is all Fed driven, even the housing market. The Fed's $2.7 trillion mortgage problem. The Fed's holding of mortgage backed securities, they haven't even begun shedding these assets yet. Sure, they've slowed down. We see a bit of a pause here, just like you saw going back several years, but ultimately they pick it back up because they know the market is completely supported by this. Plus, you have the institutional investors that we talked about just a few minutes ago. Right, and just a briefing from this article for those that still don't understand how these markets are propped up by the money creators. Quote, if you took out a mortgage over the past couple years, there's a good chance the holder of that loan is America's central bank, a consequence of its monetary stimulus efforts throughout the pandemic. And now they've extended their timeline on getting rid of these assets or shedding these assets. They're now saying September. They're going to be shedding about 30, 35 billion a month in mortgage-backed securities. We'll see. I kind of doubt it. I think they're just going to turn around and have to lower rates again and resume more QE to infinity, as many are calling it. So prepare accordingly. That's going to be all for this report. Everybody, thanks for watching. Be well, stay safe, keep stacking. Bye for now. Peace.